about a 600% increase. That's how much home insurance premiums have soared for insuring a house in places like California, Louisiana, and Florida.
More and more homeowners are abandoning home insurance because of skyrocketing costs.
And now it's leaving many people to wonder if they can still afford to own a home.
But the insurance industry itself says Florida's market is in full meltdown.
Insurance giants such as State Farm and Allstate are withdrawing from entire markets due to rising climate risk, uncontrolled inflation, and bewildering regulatory changes.
Allstate Insurance has announced it will no longer write new homeowners policies in California.
State Farm says it'll stop accepting new applications for property and casualty insurance here in the Golden State.
Uncertainty and concern have overtaken entire communities, while the economic impact extends far beyond individual homeowners. So, why are so many Americans losing their home insurance, and how could this affect the U.S. real estate market? As of 2024, the country's largest home insurers have issued about 2.4 million non-renewal notices to their customers, and that number is increasing.
If you've received a letter from your insurance company saying your policy is not being renewed, you're not alone.
Around 115,000 Florida homeowners will likely receive a notice from Progressive Insurance telling them their property insurance policy will not be renewed.
According to recent studies, the percentage of insured households in the United States has decreased in the last few years due to insurers withdrawing from certain markets and increasing premiums. Climate risk is one of the main concerns for insurers, as there has been a 270% increase in wildfires and a 335% increase in the number of structures destroyed by wildfires since 2009.
4,000 Riverside County residents ordered to flee their homes as crews battle the Highland Fire.
Massive wildfire scorching California and the desert there and now spilling into Nevada, fueled in part by record heat with little relief in sight.
Another wave of destruction. The Oak Fire, more than doubling in size to 14,000 acres. Now the state's largest wildfire of the year, ravaging everything in its path.
This rise in natural disasters is having a direct impact on the availability and costs of home insurance. In response to this situation, Americans are looking for alternative options to obtain coverage. This may include turning to residual or excess markets, which have higher premiums but offer coverage when traditional insurers withdraw. Additionally, some states offer government-assisted insurance programs for properties with extreme risks that cannot obtain coverage in the private market. However, these options can be expensive, as premiums have, on average, increased about 600% compared to their value 5 years ago.
Insurance premiums are projected to climb by 7% this year, but in areas at high risk for weather-related disasters, the number will be much higher.
We already pay at least 3 times the national average in premiums to insure our homes, and now a new international study finds the United States experience a 30% increase in the cost to replace a property in the last 5 years.
Things are not getting better anytime soon, so it's important to be prepared.
With an average cost of $12,000 a year for places at the highest risk of natural catastrophes, home insurance premiums have seen a significant increase from the $2,000 average cost in 2019. These increases in premiums can significantly affect homeowners' ability to maintain their homes and pay their mortgages. Since banks require a property to be insured to issue a mortgage loan, this ultimately affects Americans' chances of obtaining such a loan.
Florida's insurance market is collapsing. This, as a company that rates those providers says more than half of them could be given lower ratings, putting your wallet and even your policy in jeopardy.
In 2024, it was estimated that only 70% of households in the United States had home insurance, compared to 75% in previous years. This decline in home insurance coverage has been especially observed in states vulnerable to natural disasters such as wildfires, floods, and hurricanes. For example, in California, one of the states most affected by wildfires, it's estimated that 15% of homeowners face difficulties obtaining affordable home insurance coverage.
Californians now have fewer options when it comes to home insurance after State Farm and Allstate recently announced they would not sell new policies in the state.
Availability, affordability, and quality are shrinking. AIG, Allstate, and State Farm have recently pulled out of the new homeowners insurance market in California.
But these increases have crossed borders, reaching even the other end of the country. In Florida, where hurricanes are a constant concern, several insurers have stopped offering coverage in vulnerable coastal areas, leading to an increase in insurance premiums for the remaining homeowners. Moreover, there has been a widespread increase in home insurance premiums, with an average annual increase of 10% to 15% over the last 5 years. This rise in insurance costs is partly due to an increase in claims related to natural disasters and the impact of climate change on the frequency and intensity of these events.
The number of weather-related disasters has increased fivefold in the past 50 years.
Natural disasters are becoming more dangerous and causing more damage. And that's if we can call them natural any longer. A report commissioned by Christian Aid found the top 5 most financially devastating climate events in 2021 cost $156 billion in damage.
However, this increase in home insurance premiums may have been deliberately manipulated by insurance companies, as entities like the Consumer Watchdog have called for an investigation into insurance companies and professional associations.
Consumer activists are accusing the insurance industry of collusion, and they're asking California's Attorney General to investigate.
The insurance companies blame it on weather change and unrealistic insurance regulations. This morning, Consumer Watchdog blamed it on illegal collusion between insurers and called for a state investigation.
The rise in home insurance costs also has broad economic implications. The insurance sector represents 2.6% of the U.S. GDP, and the overall real estate market accounts for between 15% and 18% of the GDP. As the insurance market incorporates climate risk, it is expected to have an even greater impact on the U.S. economy. To address this situation, it is crucial to improve the regulation of the insurance market to better reflect the risk in different states. Insurers need to be able to adjust premiums according to the specific risks of each location, which may require changes in current regulatory policies, such as Proposition 103 in California. This idea was proposed by organized consumer groups in 1989, as insurance rates were exorbitantly high and unregulated.
Because there was no regulatory control at all. In California, the insurance companies were allowed to do whatever they wanted with prices.
People are angry, and that's why we put Proposition 103 on the ballot.
It's important for communities to adopt more collective and community-based approaches to risk management. This can include investments in resilient physical infrastructure and the promotion of safer construction practices to reduce vulnerability to natural disasters. Some communities are exploring the possibility of collective or community insurance as a way to reduce costs for homeowners. These schemes allow groups of homeowners to negotiate coverages and premiums in bulk, achieving better conditions than they would individually. Ultimately, the challenge of insuring homes in high climate risk areas requires a coordinated and multifaceted response involving insurers, state and local governments, and communities. Only through collaborative efforts and effective policies can the current challenges be addressed and adequate protection ensured for affected homeowners.
At Economy Media, your opinion matters to us. Subscribe and let us know what you think in the comments below.